From the library of the New York Stock Exchange at the corner of Wall and Broad Streets in New York City, you're inside the Ice House, our podcast from Intercontinental Exchange on markets, leadership, and vision in global business. The dream drivers that have made the NYSE an indispensable institution of global growth for over 225 years. Each week, we feature stories of those who hatch plans, create jobs, and harness the engine of capitalism. Right here, right now at the NYSE and at ICE's exchanges and clearinghouses around the world. And now welcome inside the Ice House. Here's your host, Josh King of Intercontinental Exchange.
One of the first things I do when I visit my in-laws in Portsmouth, New Hampshire, is to head over to Moe's Italian Sandwiches on Daniel Street for a classic Italian with extra spicy oil. It's the original store of a now successful chain of franchises, originally opened by Mo Wiener and bought by Phil Pagano in 1959, whose family still runs the brand. The sandwich, believe me, is one of the best you'll ever savor. Add to it a beer and a bag of Utz potato chips, which they sell, and you have, in my humble opinion, the world's best meal. A Moe's wouldn't be the same without a bag of Utz, itself a family brand founded in a small town in 1921 by Bill and Sally Utz, cooking 50 pounds of chips an hour out of their summer kitchen in Hanover, Pennsylvania. So why am I telling you this? What if I told you that Utz Brands Incorporated, NYSE ticker symbol UTZ, makers of cheese balls, pork rinds, pretzels, and the oh-so-addictive tortillas guacamole-flavored superior dipping chips, is now listed on the exchange with a market cap of $2.2 billion? If the Utz brand has been around for 99 years, how long has the Utz symbol itself been listed on the exchange? A lot less than 99 days. It went public through a merger on August 31st with Collier Creek Holdings. That was NYSE ticker symbol CCH, a special purpose acquisition company, or SPAC, which in July valued the snack food company at $1.56 billion, an 11.6 times multiple of its pro forma 2021 adjusted EBITDA. Friends, 2020 has brought many unexpected twists and turns, and conditions in the capital markets have been no different. Though the SPAC itself is not new, in true 2020 fashion, we've seen this vehicle raise money at a never-before-seen rate as more companies look to get acquired by a SPAC in lieu of a traditional IPO. As blank check companies surged in popularity this year, they attracted the attention from a slew of high-profile celebrities, including former Trump economic policy chief and Goldman Sachs president Gary Cohn, former House Speaker Paul Ryan, and most recently, hoops legend Shaquille O'Neal. Our guest today, no stranger to the SPAC world, is considered one of Bloomberg's SPAC moguls to watch. Ahead of his time, he has spearheaded the creation of 4 SPACs since 2016. The first, CF Corp, raised $1.2 billion for the purpose of purchasing Fidelity and Guarantee Life. The second, Collier Creek Holdings, raised $475 million to help it acquire Utz. And the third and fourth, CC Neuberger and CC Neuberger II, raised $414 million and $720 million, respectively, to focus on acquiring businesses in the financial and technology sectors. Our conversation with Chinh Chu on SPACs comes right after this.
Historical data can offer insight into the direction of markets. Yet data processing, collection, and storage can be challenging and costly. To simplify your data access needs and help find efficiencies, we launched ICE Data Vault, a cloud-based platform that enables you to access tick history for global exchanges, as well as our proprietary data, sourced from our real-time feed. Backtest your trading strategies to assess performance and viability, conduct transaction cost analysis, and support compliance requirements. Input data into surveillance systems to help detect and prevent abusive or illegal trading activities. Access over 10 years of deep tick history across asset classes. Get tick data for an entire market or on an underlying list of instruments. Access additional securities as needed. With flexible delivery options to complement your workflow. Simplify your historical data management with ICE Data Vault.
Our guest today, Chinh Chu, is the founder and senior managing director of CC Capital, where he has spearheaded the creation of 4 SPACs since 2016. Prior to founding CC Capital, Chinh was a senior managing director and co-head of private equity at Blackstone, where he spent 25 years in senior leadership roles. Before joining Blackstone in 1990, Chinh worked at Salomon Brothers in the mergers and acquisitions department, receiving his BS in finance from the University of Buffalo. Welcome inside the Ice House, Chinh.
Thanks, Josh. It's great to be here. As you talk about the Moe's Italian sandwich, it seems like a great lunch to have right now with some Utz potato chips. Sounds great.
Oh, so what did you see in Utz looking at it?
It's a great company, family-owned business, many generations, almost 100 years, 99 years belonging to the same family. Has a great brand name. We think there is a tremendous opportunity to expand the brand geographically, as well as expand the products within the brand as well. So we view this as a partnership with the family. It's really not a deal. We think of it as an investment. And a SPAC is a great way to take a company public in partnership with a family. And the advantages over IPO, as you know, is that you can cater or custom make the deal on a bespoke basis to suit what the family wants. And then you can provide the family with certain expertise. As we've learned through the years of Blackstone and the Utz deal, we have a gentleman named Roger Dermidi, who was the chairman of Pinnacle, was the most successful deal at Blackstone for the food sector, to help the company and help the family take it to the next level. And so we're really excited about it. It's a combination of a pedigree brand name, great asset to begin with, and potential to grow and expand pretty significantly.
Well, I looked at the Utz website. I read through the Utz timeline of that 99 years with Bill and Sally beginning it in Hanover, Pennsylvania. A lot of different people sort of coming into it. You say, Chinh, it remains family owned and steered. What did they want coming into it? And how did you tailor it to them?
The family didn't want to sell. The family wanted to take something that's been in the family for all these years and take it to the next level. As you pointed out, it's a $1.6 billion market cap when we de-SPAC the company. The visions of the company and the family and us are congruent. We wanted to expand this to a $5 billion company, a $10 billion company, a $15 billion company. So how do you do that? You take the brand name and the assets the company has right now, you supply with capital, you supply with ideas, you expand it geographically, and eventually we'll also make acquisitions also for the brand. The one thing that we bring would be the best practices that we've learned over all of our years at Blackstone, over Roger's various years at Pinnacle as the chairman of the company. And obviously he was also CEO of Kraft, so he brings a wealth of experience in terms of how to expand the business, how to grow the business. And for us, the deal was a must-do, given my 2 daughters just absolutely love the cheese balls. They eat tons and tons of cheese balls every week, and it's a great brand.
You and your family fled Vietnam in 1975 as Saigon was on the brink of falling to the Viet Cong. After escaping really on one of the last American military transports out of Tan Son Nhut International Airport, you landed in Honolulu, eventually settled in, of all places, Queens. What was it like experiencing such a jarring transition as an 8-year-old?
I think it was more traumatic for my parents as a 8-year-old. It was somewhat life-changing for me, but I get to relive it through the eyes of my parents, who came here with 6 kids, no money. And we actually landed in Guam, at a refugee camp before we ended up in Hawaii. Only in this country would there be opportunities for all of us to do well, receive a great education, and get our start in the various industries that we're in. So we're eternally grateful and humble by the opportunities that we were given. But it's really all about my parents and what they were able to do to navigate the new country, provide us with shelter, food, and a great education.
Do you have any memories of that day in Guam? What were your parents telling you and your brothers and sisters?
That day in Guam was especially interesting, given that my sister, Kathy, was born on April 30th, 1975, literally the day the country fell. So I remember vividly as an 8-year-old, the Vietnamese flag, or the old Vietnamese flag, being flown for the last time. people were weeping, and my mom was being rushed to the hospital to give birth to my sister. And it was an emotional moment for both almost the end of our nation to that extent, and the birth of my sister on the same day.
From an early age, Chin, you were fascinated, as I understand it, from the world of finance, reading about economics in your spare time. What did you learn about yourself as you would devour these books?
I just love the entrepreneurism. I love the sense of business and how to figure out the pieces of the chess puzzle. And it's always been fascinating to me, the stories that have people made in America, and that attracted me to finance very early age.
Was there a particular book that left a particular impression on you?
There were many. When I was young, I read a lot of these self-help books, whether it's Think Positively through a Positive Mental Attitude, a lot of Zig Ziglar books, 7 Effective Habits of Successful People. And those were a combination of business books and psychology books that really left an imprint on me.
Your parents, always strong believers in education, putting you and your 5 siblings through school. Did you always share this belief, or how did that sort of pass down to you?
Yeah, my parents always focused on education being the most important thing, and being good people being the second most important thing. I think the output of that, whatever careers we ended up in, were really outputs instead of the inputs of that. And so they didn't focus on business per se. In Vietnam, or the Vietnamese culture is really medicine. So my dad's a doctor, and there was a lot of focus on steering us toward becoming a doctor, which my sister's a doctor today.
Were they disappointed when you took a different path?
I'm not sure they understand what I do up until today. No, I don't think they're disappointed, but it's just a very different path, given finance is not a real key industry in Vietnam or the culture I grew up in.
I mean, you worked your way through college, Chin, at the University of Buffalo. You sold educational books door to door for Southwestern Co., becoming, I think, one of the company's top salespeople. Are there skills you learned on that job that still stick with you today?
You know, talking about Buffalo, the other one we should be SPAC is all the chicken wing places in Buffalo to compete against your most talent. I don't know if you had Duff's Chicken Wing. They're absolutely amazing. Look, on the selling skills, Southwestern was a door-to-door book selling company, selling educational books and cookbooks and children's story. And I think it provided for me an invaluable skill set, taught me an invaluable skill set in terms of how to communicate, how to be persistent and work hard. And I think those are invaluable skill set, whether you become somebody in finance or management or any aspect of life.
Chin, you began your career on Wall Street in the M&A department at Salomon Brothers. The legendary John Gutfreund, I think, was CEO at the time. He, of course, made semi-famous through Michael Lewis's breakout bestseller, Liar's Poker. Were you witness to the scene where Gutfreund challenges John Merriweather to a $1 million hand?
As a 21-year-old young kid graduating out of school, I was not. But certainly the culture there is very interesting and legendary.
2 years after you joined Salomon, you joined Blackstone Group, I think, which was then just under 5 years old. Steve Schwartzman was another guest on our show, founded the company along with Pete Peterson. Those were the early days, and by no means easy, according to Schwartzman's account. What attracted you to the company at that early stage? I
think I was attracted to Pete and Steve, full stop. Pete and Steve had this grand vision of what the business could be. And I was drawn to Steve's incredible energy, his vision, his enthusiasm. And I consider him the best deal maker at that time and of his generation. So here's an opportunity to learn and get exposure to Pete and Steve directly. And Steve has been incredible mentor of mine through the years. And I owe, and a lot of people owe the debt of gratitude for Steve for what he's built, not only a firm, but an industry, and it's incredible the progress and the development of Blackstone through the years. I mean, beyond the bold-faced names in finance like Schwartzman and Peterson, who are some of the other people who've been most influential to you? I'll tell you, Steve has been one of the mentors and somebody I look up to, and I've learned a lot from. There's a gentleman that I met on a plane once. during my career at Blackstone, Fred Lee Barber, who's a mentor of mine from a personal level outside of finance. He taught me a lot about food and culture and just refinement. And obviously, my parents are big mentors of mine as well. I owe them a debt of gratitude.
How did that relationship with Fred evolved in ways that would eventually teach you about food and culture? I'm just curious.
So it's interesting. I met him on a plane coming back from Taiwan on a business trip, and we just took a liking to each other. He was 20, 30 years older than I was. And he took me out to dinner every month for the next few years.
Wow.
And just taught me about food, taught me about culture, classical music, with absolutely nothing that he wanted in return. And it was just an incredible lesson for me that you should always give back, and it's important to mentor people. And one of his sons, both of his sons, ended up as the proprietors of Blue Hill Restaurant. And so he taught his sons the right thing. He's just an incredible man.
I mean, talking about always giving back, Chin, even after forging your successful career at Blackstone and finance, you never forgot your roots in Vietnam. When a flood devastated central Vietnam in 1999, you and your sister immediately set into motion a plan to help. You raised $20,000 from your friends and family, using it to distribute supplies to flood victims all across the country. How important is it to give back?
I think we all need to give back. It's a privilege, frankly, and an obligation for us to do so, and we feel it's very important. We're involved in a lot of causes, not only in Vietnam, but also in New York and in other parts of the world as well. With regards to Vietnam, our organizations have built a number of schools, help with flood victims, as you said, and that initial flood long time ago when we were young. But it's very, very important to give back. I think it's an obligation and an honor.
I remember clearly when President Clinton was the first U.S. president to go back to Vietnam in the 1990s. I think he's been followed, I'm not sure if by every president since, but certainly President Trump. I remember his trip to Vietnam over the last few years. What's your take on the state of the country today?
Vietnam is a growing economy. It has a lot of the elements of China 20, 30 years ago. The people here, they are hardworking, very high literacy rate, 98, 99%. And so it has a bright future ahead of it. It also has blessed with some natural resources as well. So it's a nice combination of a hardworking population, high literacy rate, still relatively low wages, and it has some natural resources as a buttress.
After the break, Chinh Chu, founder and senior managing director of CC Capital, and I discuss how he used his extensive private equity experience to launch himself into the world of special purpose acquisition corporations, or SPACs. That's all right after this.
Board diversity is important. Board diversity is important.
Board diversity is important.
Board diversity is very important, not just because it's the right thing to do, but because diverse leadership at companies creates better companies.
This is about value, not values.
With board diversity, you build better companies.
Diversity of thought, diversity of perspective.
Different perspectives often yield better outcomes.
We need to have different perspectives with different backgrounds to really inform and find the best solutions for our organizations.
Companies that have more diverse boards perform better.
Diverse teams are better performers. That is absolutely true in the boardroom as well.
It makes a difference to the employees who work for companies. It makes a big difference for the communities in which they work.
Our business is about building leaders for the future, and that talent cannot be only half the population of the world.
What are you waiting for? 50% of the population for some reason isn't qualified? Let's put the smartest people we can in the boardroom, and why ignore people or exclude people for any reason other than that they're not qualified?
Welcome back. Before the break, Chinh Chu, founder and senior managing director of CC Capital, and I were discussing his early life and his successful career in finance. Chin, in 2015, after 25 years at Blackstone, you set up your own private equity firm, CC Capital. Walk us through the process of starting your own firm. What made you decide to take that leap of faith?
I was very excited to set up CC Capital. Our focus at CC Capital is to invest in high quality companies that have long-term compounding potential with significant barriers to entry. So in some ways, we can narrow the aperture of the companies we take a look at and invest in. And we invest in companies both on a SPAC basis, whereby we take companies public via SPAC, as well as a private basis, such as the Dun & Bradstreet transaction that we led as well.
What's your first great SPAC story?
The SPAC market has really grown since we raised our first SPAC. That year when we raised our first SPAC, which is CF Corp, when I did jointly with Bill Foley, the totality of the SPAC market was about $5 billion. Today, the market has mushroomed. In 2020, there's over $35 billion of SPACs being raised. And what I like about the SPAC market is that it's an ability to take companies public that is an alternative, in some ways, a better alternative to an IPO, that you can partner up with families or sellers of businesses. You create a bespoke transaction to take these companies public. And there's creativity associated with the SPAC market in that every deal is different. It's not a traditional IPO. And our first deal was one that we took a company public while it was a public company already. It was one of the few public to public in a SPAC market. Whereas the Utz transaction, we partner up with the family to take that public. So every deal is different, every deal is creative, and we like that.
I remember reading about some of the famous deals that Steve did at Blackstone, but how is running a SPAC and how are SPAC deals different from the private equity transactions that you were so familiar with for a quarter century working with Steve?
So in some ways, they are very, very different. A private equity deal oftentimes and most times involve significant leverage, 5 times leverage to 7 times leverage in a private equity deal. A SPAC deal, since you're taking it public, involves very little leverage. You're structuring a SPAC deal at 2 times, 4 times leverage at most. A private equity deal is taking a company private or keeping it in a private domain. A SPAC deal is taking the company public, and therefore you have liquidity and you have public shares, as you pointed out, us trading at public marketplace. So it's some ways almost opposite of each other. So we don't think the SPAC deals per se conflict with that of private equity. The Dun & Bradstreet deal was a traditional private equity type deal, which we did outside of our SPAC business. So on Dun & Bradstreet, it was a publicly traded company. It's been around for 174 years. We took that private in February of 2019. We led a consortium which included Bill Foley and T.H. Lee and a number of other prominent investors. That was a going private transaction where we thought it was much better for this company to go private, restructure, improve in all aspects, and then go public again. So it was a $7.1 billion transaction where the equity check was $2 billion. There was $1 billion of pref, and then there was $4 billion of financing. Once again, the financing represented a very high multiple of EBITDA relative to a SPAC deal. The company then was able to go public again after we made significant improvements to the company, July of this year. And today, the $2.1 billion of equity is worth approximately $8 billion today. So a significant gain over a very short period of time because of the improvements that were made to the company. Number one, significant changes in the management team. Number two, a reinvigoration of revenue growth. And the company is just a much better company today.
Do you have a playbook of all of the changes that you're going to need to do to improve a company over a short period of time that is sort of off the shelf, or do you have to do it bespoke for each case like this one Dun & Bradstreet? Did you know what you had to do before you could actually get under the hood, or had you spent enough time under the hood to know what was actually going to take place?
Josh, in every transaction, every investment, we conduct extensive due diligence. So by the time that we make the investment, we know exactly what needs to be done with the company. And each situation is different from the other. So certainly we have the playbook that I've learned over the years, whether it's at Blackstone or on my own, and I've learned from other CEOs and other private equity professionals. But when we distill that into what is needed for the company, what is appropriate for the company, and we use it on a very specific basis.
You mentioned people like Bill Foley, Thomas H. Lee. I'm sure these are people you really love working with. Who are some of your favorite partners when you're working on a SPAC?
Look, I think we are blessed to have great partners on SPACs and on other deals as well. I think Roger Dermidi, who's our partner on the Utz transaction, is what we call a water walker. He has done such an incredible job with every company he's touched on the Pinnacle transaction, that deal yielded approximately 4 times the gain, 4 times our money for Blackstone. And then on a public basis, after he took it public, the public also made 4 times his money before the eventual sale of Pinnacle. So what he brings is a wealth of management experience, strategic experience, how to expand the company, how to mentor and work with great management teams. And so we're very blessed to be partnered with Roger.
You have a long history and success with SPACs, Chin, that you started years ago before the product became so popular. The space has evolved so much over just the past 5 years, 2020 in particular. Approximately 100 SPACs have raised over $35 billion this year. 5 years ago, only $4 billion raised by SPACs. What is happening this year?
The SPAC market is now widely accepted by the corporate community, and the success of the previous SPACs has beget a new round of fundraising and compounding the fundraising process. We think the SPAC product is where it was not a mainstream product 5 years ago, is one today. And we just think the SPAC product is here to stay. Having said that, there is concern, including on my part, regarding how much is being raised and what types of deals are getting done in the SPAC market today. And it's a natural evolution. You have these ebbs and flows where, as you know, in finance, money flows in, and then eventually it'll get tempered if the deals that are being done in the SPAC market are not doing well. However, we think that the deals available today for the SPAC sponsors are significantly greater than the capital coming in. In other words, the capital formation is still not ahead of the deal flows available, because what's happened is that the aperture for deals available SPAC has just imploded as well. Whereas in the past, Fortune 500 companies would be resistant to consider a SPAC deal. Today they are. Whereas in the past, private equity firms would not consider a SPAC deal or would be hesitant to. They're absolutely considered SPAC deals today. The blue chip investment banks, the Morgan Stanley, Goldman Sachs, CS, Bank of America, everybody would advise their clients to take a look at SPAC deals today. So we think the SPAC market has a bright future. We just got to be careful to temper the right types of deals that go through SPAC and make sure the sponsor of SPACs are the right sponsors going through.
So if Shaquille O'Neal or Paul Ryan or Chinh Chu come knocking at a door of a private company like Utz or somebody else, what are the reasons why a company might choose this SPAC business combination over traditional IPO as another way of entering the public markets?
So the SPAC confers different advantages and significant advantages over IPO. Number one, as I mentioned, is a bespoke process where you can structure the deals differently compared to IPO. Oftentimes, the seller or the family or the private equity firm or the Fortune 500 company wants a different structure than the IPO, and the SPAC offers that. Number two, the SPACing process is much more nuanced. And during those meetings, you can offer, for example, 3-year projections that an IPO cannot offer in such roadshow. And that also is an advantage, especially for stories that need to be nuanced, that needs to be explained, that needs another layer underneath the surface. And number three, oftentimes the SPAC process is faster than the IPO process. And so the combination of speed, the nuancing of the story, and also the bespoke nature of it are advantages of a SPAC over an IPO process. Actually, let me add one more thing, which I forgot on the 3 points I mentioned. The fourth point why the SPAC is better than IPO also is that you have the sponsorship that accompanies the SPAC, whereas an IPO, you don't have that sponsorship. An IPO, if X family or X company is selling it to the SPAC market, you don't have the sponsorship. Here you have a Roger Dermidi. Here you have a myself or some other sponsor, part of the buying of the stock, part of the board, part of the value creation afterwards. And that sponsorship is important not only on the way out to take the company public, but it's important thereafter in terms of value creation, thereafter in terms of when the original seller, if they decide to sell, there's no overhang issue in the market because the new sponsors are staying in. So that sponsorship is very, very important.
So we mentioned 100 SPACs raising over $35 billion so far this year. Looking at the activity in September and early October, Chin, are there any signs of this slowing down?
I think it will. I think there's a natural level to the SPAC market. We don't know what it is. It certainly is not going to be 5 years ago when it accounted for a very small portion of the IPO market. But Josh, I think over time, I don't think it's going to be 40% of the IPO market as is this year. So where that natural level is, we really don't know, but we certainly think it's somewhere in between. And that natural level will settle down in due course. But we think the SPAC market is here to stay. We think there'll be more innovation for the SPAC market. And we think the acceptance of SPAC deals have skyrocketed. And now it's norm instead of a niche product.
So Chin, we've talked about Utz. We've mentioned CC Neuberger and CC Neuberger 2. What makes all four of your SPACs different from the other SPAC IPOs this year?
In the CC Neuberger 1 and 2, we have a significant structural differentiation versus other SPACs. Not only do we have a forward purchase commitment, FPA, but we also have a backstop. So let me go into that. You mentioned there was a CC Neuberger 1 was a $414 million SPAC. That is added on to a $200 million forward purchase commitment. So it's actually $614 million. A forward purchase commitment is a commitment to fund the deal without redemption and without the approvals. So that's a very powerful element. In addition to that, we have a $300 million backstop associated with this SPAC. So what that means is that in the unlikely event that there's redemption by the $414 million public shareholders, the $300 million backstop will be there to support that. This is important because when you are marketing to highest quality companies to partner up with or to take public via SPAC, if without the backstop and without the forward purchase agreement, but more importantly, the backstop, you don't have that fund certain deal. You don't have that back end certainty. And the weakness of the SPAC deal has always been what happens in the back end, what happens if shareholders redeem. And we think we have certainly mitigated the problem, maybe even solved the problem with the backstop. And we're the only SPAC out there with the backstop, given our partnership with Neuberger. So we think that's a huge structural advantage that we have that is added on to our track record and our partnership ability in terms of value creation there afterwards. But the structural element is exceedingly important.
An impressive track record it is, Chinh Chu. You can't be launching SPACs 24/7. What do you do in your spare time?
I watch a lot of sports, whether it's the Lakers winning last night or watching a lot of baseball games and eating my Utz potato chip. Sports coming back has been a huge, huge thing. So I really, really enjoy sports, watching and playing sports.
Someone wants to pursue a career like yours. What advice do you give them? Hard work,
persistence, and finding the right mentor. I was very fortunate to, early in my career, finding the right mentor. Certainly hard work, persistence are necessary ingredients to every career.
Bloomberg recently named you one of the SPAC moguls to watch, Chin. We'll certainly be watching. Give us a heads up. What's next for you?
Next is a lot of the same thing. I think finance evolves, and we believe that creativity and innovation are required with finance. So as the SPAC market continues to grow, we'll continue to evolve and hopefully lead some of the innovations, such as the structural element I've talked about. But in addition to SPACs, we'll continue doing private deals, evidenced by the success that we've had on the Dun & Bradstreet transaction. So we're excited about the future and looking forward to moving ahead.
Thanks so much, Chin, for joining us inside the Ice House.
Josh, thank you very much.
And that's our conversation for this week. Our guest was Chinh Chu, the founder and senior managing director of CC Capital. If you like what you heard, please rate us on iTunes so other folks know where to find us. And if you've got a comment or a question you'd like one of our experts to tackle on a future show, email us at icehouse@theice.com or tweet at us at Icehouse Podcast. Our show is produced by Kearney Ferguson with production assistance from Ian Wolfe and Ken Abel. I'm Josh King, your host, signing off from the library of the New York Stock Exchange, headed out for a couple bags of Utz. Thanks for listening. Talk to you next week.
Information contained in this podcast was obtained in part from publicly available sources and not independently verified. Neither ICE nor its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the information and do not sponsor, approve, or endorse any of the content herein, all of which is presented solely for informational and educational purposes. Nothing herein constitutes an offer to sell, a solicitation of an offer to buy any security, or a recommendation of any security or trading practice. Some portions of the preceding conversation may have been edited for the purpose of length or clarity.